William de Vijlder oversees more than €500 billion as Global Chief Investment Officer of BNP Paribas Investment Partners. Pleased to say he joins us live now from Brussels. Mr. Vijlder, thank you very much indeed for speaking to us. And so, given that detail is a little bit thin, it's a little bit sketchy at this point, you're saying we need to exercise caution. How long do you think this post-summit appetite for risk will last?
Well, I think markets will quite quickly move to a mode of wait and see. There is the upcoming G20. Hopefully that will give some more clarity. But based on statements made by European officials and politicians, it is clear that it will take several weeks before we have a clearer picture. Also, people are going through all the details, reading and rereading, and this is also something which will take away the kind of initial enthusiasm that was triggered by the headlines of the decisions.
So do you think then that this bout of optimism is going to be followed by a sort of flatter downward levelling of prices, if you like?
That would be my expectation, also against the background of a global environment, market environment, specifically relating to the cyclical developments in the US and China, which also is giving enough food for reflection, to put it euphemistically. What I really mean by that is reasons to be cautious.
Mr. Vijlder, what exactly are you focusing on with this agreement when we have the G20 meeting in early November? What points do you want to see more clarification on?
I think the big question mark is, of course, how will we get to 1,000 billion? And we have the statement of the principles, the statement of the ambition. Now markets will want to know, how do we get there? The G20 summit is an ideal forum to have statements in that respect, either official ones or in the corridors, declarations being made. All eyes, of course, are turned towards China. Will other countries nevertheless show some appetite? We don't really know yet. I think what is also going to be very important is looking at the statement and reading between the lines, whether there is going to be a message of some increased confidence of the leaders with respect to what is happening both in the Eurozone and more broadly speaking. And if that message would come true, and of course underpinned by some facts and commitments, that of course would be a boost to confidence. For the moment, I think markets will simply adopt and wait and see attitude, because the jury is still out completely.
All right, so I'm just wondering about your investment strategy at the moment. You're underweight equities. Just take me through some of your concerns. Why is that?
Well, the thing is that we are in a very binary world. Now, that means that the equilibrium that you have in the markets is very fragile. It means it can go down significantly or up significantly. And typically both of these moves are characterized by some overshooting. Again, from a psychological perspective, this is fully understandable, but it makes, of course, the use of the risk budget, taking a lot of risk at this moment, makes it a very tricky decision. Our worries were that on the Eurozone we would come out with something that would not be really to the taste of markets, first. Secondly, that with respect to the global picture, there would be continued signs of additional weakness. That seems to be changing now, at least for what the US is concerned. But we still adopt a wait-and-see attitude.
A wait-and-see attitude. And how do you feel, what is your attitude then towards financials right now? How do you feel about investing in banks? Has the agreement that we had out of Brussels reduced the risk of a banking crisis in Europe?
Well, obviously speaking, if you look at what has been decided and you also see the market reaction yesterday, there is a totally different reading now compared to what the reading was only a couple of weeks ago. So that is a very positive outcome, then, you could say.
Do you have, with respect to recapitalization, we're talking about €106 billion to raise the bank's core Tier 1 capital ratio so that they're strong enough to withstand losses on sovereign debt. Does this give you more confidence with the banks, or are you more concerned about how the banks might respond to having to boost their balance sheets in this way, if you like?
I think you need to differentiate between the systemic part and the company-specific part. On the company-specific part, I will not give comments. It very much depends by definition on every single institution. If you look at it from the systemic part, I think what's important is that clarity has now been provided, and that explains also the strength of the reaction yesterday. Markets some days and weeks ago had ended up in what you could call a kind of state of paranoia, or where you have a continued reinforcement of a kind of a vicious circle, sovereign worries leading to a liquidity crisis at the level of states and then impacting banks and so on. I think with what has come out of it from the systemic side, we can take a far more relaxed attitude now.
Thank you very much for your analysis. Good to talk to you, Maryam Nemazee, Chief Investment Officer, BNP Paribas Investment Partners. Thank you.